these are the companies which are going to announce their Q3 results as well today. So let's begin first with Paytm. 197 Communication, listed as Paytm on the markets, will announce its results today. Brokerages are expecting Paytm's revenue to drop by about 34.4% year-on-year to about 1868 crore levels, and this is compared to the 2850 crore rupees in losses last year. However, on a quarter-on-quarter basis, revenue forecast is expected to grow by 10%. Now, the company's net loss is projected to widen to about 35 crore rupees or so compared to 22 crore rupee loss in the same quarter last year. Now, for context, Paytm posted a net profit of 93 crore in Q2 of FY25. So, investors will focus now on how Paytm's new business segments are performing. But what is your view on the Paytm stock for the long-term investor? Is there a business case, and is there any worth in holding on? And we've seen the stock has been rallying. In fact, after exactly a year ago, when we saw that massive correction by way of RBI's action, the stock had continued to fall and hit lower circuit, and thereon it has been on an upswing for all of last year. Mr. Choksey, how do you see Paytm going forward?
So I think it's a very pertinent point in question. In my understanding, it's not a unique proposition anymore now. I think the Paytm used to be, I think, a unique proposition somewhere in 2015-16 period. That era is no more available to them. Second most important aspect is that I think the fintech is not the only solution. The balance sheet is the solution. If you have a stronger balance sheet, then probably fintechs can work your way. If you have a weaker balance sheet, I think the fintech even can't help you. And that's what I think the victimization has happened with the Paytm, I believe. I think the kind of loss-making proposition that they have been having in the balance sheet is not helping them at all. And on the contrary, even if I think they start making some profits here and there, current valuations do not justify unless and until we see a sustained profit at a higher pace. If that does not happen, according to me, I think the current valuations will probably give up at some point of time. That's what my take is. Unless a very big differentiator is being created,
right?
They do have, I think, the number of merchants, I think, in their favor. That is a big count that they are having. But beyond that, I think technology is not a mode. That is not a differentiator at this point of time.
All right. Well, no differentiator, and wait for a differentiator is the advice coming in from Deven Choksey. Mr. Choksey, let's move on to another company, another startup that got listed a few years back and has had a roaring success, and this is Zomato. Zomato is also expected to announce its Q3 results today, and as per brokerages, the revenue is expected to rise about 66% on year, while a 55% jump on profits year on year could be expected. Remember, the company's operating margin is expected to grow nearly 4 times year on year, but it might see sequential decline due to higher ESOP costs. Now, the success story in Zomato is not just Zomato's food delivery. In fact, what has outshone that has been Blinkit's growth, and that is something, again, that brokerages are very, very bullish on. So, Mr. Choksey, how do you see the Zomato story playing out from here?
So it's an interesting one. I think I'm a big fan of consumer tech companies, and I believe that I think they have solved seriously, I think, good amount of problem for most of the citizens in the country. So good credit goes to them. But the fact is that I think on the balance sheet side, I think things don't go as well as an analyst, as an investor into the companies. I don't think that I think I'm getting enough confidence. Simple reason is that even if you're growing at 50-60% rate of growth on top line, bottom line, still at this point of time, the valuations are not at all cheap. Even if one has to assume that 200 crore quarterly profit has to get increased, I think, every successive year by 50% for next 3 years, still you're quoting at a 3 lakh crore plus market capitalization, which is not at all, I think, giving you comfort as far as I think the size of the profit is concerned. Even if one assumes that I think down the line, fast forward 2 years, they will have 5,000 crore worth of profit in the balance sheet. Would you still justify 3 lakh crore worth of market capitalization, which is today? So that is what I think the main argument is, that the businesses are doing excellent, but the market has priced everything upfront and quite in advance. No scope for any error, no scope for degrowth. So in my viewpoint, I think one would like to stay away from it because of the higher and expensive valuation.
All right. Well, higher earning expectation and stay away from Zomato is the word coming in from Mr. Choksey this morning. Mr. Choksey, I also want to talk about another very interesting company, and this again is a stock that we have seen really surge over the years, especially all of last year, and this is Dixon Technologies, the maker of Vivo smartphones as well as a lot of the Samsung products that we consume here in India. Now, in the September quarter, the company reported a net profit of 412 crore rupees for the quarter, making a 265% jump compared to 113 crore rupees in the same period last year. Revenue from operations more than double, rising 133% to 11,500 crore rupees, up from just about 4,943 crore rupees in the corresponding quarter of the last fiscal. So, Mr. Choksey, this again, Dixon Tech is one story that has been central to India's ambition when it comes to Atmanirbharta in electronics manufacturing and all the PLI schemes associated with it. So, how do you view Dixon Tech from here?
So, EMS companies who are engaged in the consumer durables are also for the purpose of, I think, the all the consumer products. One among them definitely is standing tall is Dixon. I agree. Again, I think the situation is same on the valuation side. The businesses are doing robust, they are doing exceedingly well, but everything seems to be in price. Because if there is no value left for any kind of rationalization in the numbers going forward, which means that the challenge would be to the investors who bought it at a higher price. God forbid tomorrow, a couple of quarters down the line, if the growth starts rationalizing from what it is currently, then probably I think this market, the investors will not take time to exit the counter and get to at a significant amount of cut. So in my viewpoint, I think the expensive valuations are required to be looked at, not immediately the story. The story remains intact and it will remain intact as I see it.
I want to quickly shift focus now to one IT sector company which announced its results over the weekend, and this was Wipro. And Wipro stock is up about 8% or so in early trade this morning. What do you make of the IT story now again with Donald Trump coming to office and the debate on H-1B visas as well as keeping American jobs in America and the quarterly results that we've seen from Wipro?
Fortunately, I think most of the Indian IT companies have defied the entire challenge that analysts have posed to them. Like of registering better numbers, better margins, along with a very significant part that a higher amount of inflow of the new orders and get to large size orders, which gives them visibility of 4 5 years in most of the orders. So from that perspective, I think the doubt that one would carry about I think they're not growing or not producing enough revenue, I think that will at least take a back seat. The
Right.
second most important aspect, as I see it in this particular activity, they have been systematically rationalizing their entire workforce and employing AI to the best. So, in my viewpoint, I think if you keep on doing this particular job of controlling the cost on one side and maintaining the high inflow of large ticket orders, that means I think the company, even though grows moderately, will do a better job than before. Coming to, I think, the entire prospects going ahead, in my understanding, I think from coding to computing is the mantra that most of these companies are adopting. And larger amount of computing would demand higher amount of adoption of AI. Higher amount of adoption of AI means for all the customers that these companies are serving,
Right.
it would mean that I think they will require to employ significantly large amount of technology-led platforms, which would probably give them the sustainable revenues going forward. So business model also is changing for many of these companies. So we remain cautiously optimistic about the prospects going ahead for most of the IT companies, and in particular engineering R&D companies, which are relatively better placed comparatively compared to the large cap companies.